Welcome back to Market Day Report. This is it, right, folks? This is the last time we get to see each other before the top of the hour, which is 1 o'clock Central, 2 o'clock Eastern. That's going to be the Cow Guy Close. Love to see you there. Fast, fun, and informative. We're going to go through some of the things that happened today, the bigger stories, and do a little bit of a deep dive to see if we can get our feet about us and let you know what's really going on out there. But in the meantime, we're going to have to go through these prices, too. They're pretty good. I mean, we've kind of come off our highs, but let's take a quick peek and see how corn is shaping up here. 3 3/4 cents higher in that D's contract. 670 even is last. Not too bad, but that's in the middle of the day's range. 4 cents higher in March, right behind it, 674 3/4. All right, how about soybeans? What are the beanies doing? They've been kind of slowly but surely falling back to unchanged here. We're only up 2 cents now. Nova's 14.13 1/4. That's 3 cents off the lows, folks. And that's, what is that? That's 24 cents from the highs. Look at that. 2 1/4 cents higher in Jan, right behind it, 14.18 1/2. We can't really get too excited about that. Wheat in Chicago, what's that doing? We got solid double-digit gains in the wheat market, 18 1/4 cents higher in the December contract there, 8.76 1/4, while March is up 18 1/4 cents to 8.89 1/2. If we follow along and go the Kansas City route with the hard red wheat there, 19 cents higher in Dees to 9.48 1/2. March is up 20 cents to 9.46 even. How about spring wheat? Spring wheat in Minneapolis. Let's go 17 cents higher in that D's contract to 9.48 1/4. And we're 15 1/2 cents higher in March to 9.53 1/4. So middle of the day's range in most of those wheat products. Nothing too significant, but good double-digit gains. How about cotton? Boy, cotton just can't get off the mat here, right? 52 points lower in D's to 87.85, 30 points from the low. Well, that's a good segue into bringing on our next guest analyst. It's going to be Ted Seifried from Zaner Ag Hedge in Chicago. Thanks for being on the show, Ted. Well, I rattled off a lot of numbers. Do they mean anything significant to you?
I don't. First of all, Scott, I really need one of those pins that you're wearing. That's really fantastic. It's awesome. Look, you had a lot of things kind of trading in tandem here today. This is another day where it's a bigger picture day. You look at the stock market really trying to have positive territory early in the day. It's all that's faded away into new lows, with the S&P making new low below those June lows here just a little bit ago. The dollar index, which was under a little bit of pressure early, has reversed and has now gone higher. Crude oil, which was up almost $3 earlier, just a little bit ago, struggling to stay unchanged. It has bounced a little bit since then, but a lot of things that had strength early have given a lot of that back. And so you see that in the grains, and you look at where we are on the chart, and that's a bit disconcerting. You really don't like this price action that the grains are having right now. Kind of leaves you with a bad taste in your mouth, and it kind of feels the same way about the overall market climate as a whole. Again, looking at like that S&P and say crude oil. That being said, we've got this big report happening on Friday for the grains. So I really wonder if we should be doing much of anything before that report. We need to see that what the quarterly grain stocks number says. We need to see if the USDA is going to come in and revise last year's production. I think it'd be a very interesting thing, Scott, if they were to revise last year's production numbers lower, because it really calls into question what this year's yields might be if we're comparing one year to the next and saying, hey, this year is maybe a little bit worse than what we were seeing last year. So Friday should be a very big deal for the grains. But in the meantime, you've got these outside markets influence really kind of dominating the grain trade at the moment.
And having said that, I agree with you. They've held up pretty well, I think. And so if they've held up pretty well, even in the face of all that negativity, if we do get something bullish out of something on Friday, and you can see the dollar come off just a little bit, and maybe these rates too back off, because as you were talking about everything that rolled over, I went back just quickly and looked at all the interest rates today, the 2-year, the 10-year, the 5-year, and they've all kind of strengthened a little bit, and that's going to be negative too. So if we can get a little bit of a reprieve from the dollar and those rates, and they're both hand in hand, boy, you could really see some decent movement in these grains. I agree with you. So we're going to keep an eye on that. Stay right there, Ted. We're going to go away. We're going to pay some bills, and we're going to come back and talk more with Ted Seifried from Zaner Ag Hedge in Chicago after this. All right, let's jump right in and not waste any time and take a look at what these live cattle prices are doing, because that's probably what you're here for. You don't want to really listen to me. Live cattle, the Dees live cattle market's just adding a little bit to their losses, but I can't really get, I don't want to be too hyperbolic. That's a big word. Don't ask me to spell it. 25 cents lower in Dees. 147.10 is last. We got a 35-cent loss in Feb to 151.07. Quiet. How about feeders? I think these losses were just a tad bigger, and they are. October's down 55 cents to 176.52. And again, in middle of the day's range, we're not going to read too much into this. 57 cents lower in no, 176.47. And here's where the losses really kind of add up, though. Let's take a look at this. The lean hogs, Dees, down $2.90 to 76.50, and that's 35 cents from the lows. Trading real heavy as we limp into the close here. Feb's off $2.92 to 80.72. Let's get back to our esteemed guest analyst, Ted Seifried. Ted, what do you think about these livestock prices?
I definitely think people do want to listen to you, Scott. I think we've proven that time over time. So, yeah.
Yeah.
But,
what, do I owe you money or something?
Maybe. No. Listen, look, hogs, just, wow. It's just been a precipitous free fall in the hogs market. Personally, I think we should be finding some value at some point here in the relatively near future. But wow, it's just been risk off trade like crazy in the hogs. And honestly, longer term, we've talked about it before, Scott, there might be a pretty good value buyout in the hogs there at some point as people want to spend less money on higher priced beef, maybe wanting to go to that cheaper alternative in the pork. But it doesn't feel like that at the moment. The speculators just don't want to have anything to do with it. What I will say is that open interest is decreasing, which I think is very interesting. This is just a get me out sort of scenario. A lot of it has to do with China selling off their reserves fairly aggressively. But again, at some point, I think hogs are a real nice buy here. Cattle are weathering the storm fairly well. I think you said it well when feeders were down more earlier when the corn was sharply higher. But the fact that corn's come off its highs is helping that out a little bit. And, we've really kind of beaten up the cattle complex pretty badly here in the short run. A lot of that having to do with the weakness that we're seeing in the stock market.
Yep.
So it's nice to see us trying to stabilize a little bit.
Trying. That's the key word. All right. Appreciate that. Thanks for coming on. That's Ted Seifried, Zaner Ag Hedge in Chicago. Appreciate you being on the show. It's all great content. I'm going to bring it back home one more time so I can roll it up and throw it over to Suzanne.